Good morning. Good morning, ladies and gentlemen. Thanks once again for tuning in to another pre-market watch list. So give it a few minutes here and we will start rocking and rolling and taking a look at a couple different stocks that are kind of moving this morning. Good morning, Lost One. So yeah, there's a few more stocks and what's on the watch list, but there normally is. When you got multiple computer screens, you can keep an eye on a couple different things at a time. So anyways, the main watch though is still going to be Roku. That is going to be the main watch for me overall. What's going on, Camilo? What's going on, Robert and James? Good morning, guys. So with no further ado, let's get into it. And yesterday, I wasn't able to be on. Didn't even trade yesterday because my power was out for a majority of the day. So that's why I wasn't online yesterday. So anyways, let's get into it and start sharing the screen. All right, so here we are. First stock that we'll talk about because it's really the most relevant that I believe, personally, is going to be Roku. We've watched and we've been following this for so long, but the way I see it is on Roku, you can see we had our top here at 142, then we kind of came down and then we basically just held perfectly in terms of support and kept bouncing. Like right off of 128, 129, you can see we held here, we held this day, we had a nice lower wick that got bought up, one candle that got bought up, which created the lower wick. Then we had this big down drop yesterday. That got bought up and reversed throughout the whole day, creating another really nice lower wick. And now we're just kind of pressing up on this 136 area. So I'd like to watch Roku long, but really only over like the 136 area, right? If I zoom out here, right, you can see it had a strong bounce there, and we're just kind of we've based and we just kind of rounded up. So I think today would be the nice day to look for a breakout over 136. And at that point, you could really just look for it to kind of get close or approach near the 142. And the way I see this is, based on the way it's moving, we could just see another push up that brings us right towards the 142 mark. And then that puts us kind of just into like a sort of a small double top formation. So anyways, today for me, definitely going to be keeping an eye on Roku long bias. It's already there's a small little higher low pre-market you can trend out. And then from high a day yesterday across this low point, you can already see we're kind of breaking over it a bit. Yeah, that's good right there. We've kind of already broke that trend. So now we're coming down and we're testing that trend. So as long as the price action on Roku can kind of stay above like 134.50s, above these trends in this area, I think it'd be it's decent for potential long, right? So going to be keeping Roku on watch long bias. Really only want to be long on it over 136, or if it just completely crashed out down towards 128, then I would just dip by the 128 bounce. Okay. Yep. So anyways, consider Roku long bias. And then there's just a few other ones. I mean, you guys know as well as I do, things are always moving. So there's a couple earnings plays. You have one like SE. SE is just an earnings play that dropped out this morning, and now it's kind of just hovering, hanging around. Am I really crazy about it? No. This is more or less just kind of on watch because why not? So consider SE to have on your watch list. Another one this morning that reported earnings was BIDU. This one actually looks really good. This is something that I would highly consider watching today. You can see it had a really good earnings report, pushes up, holds throughout after hours trading and into pre-market. So this has a really good formation. This one's holding pretty nicely. This also does have quite a few gaps to fill back to the upside. You can see there's one gap here to fill, then there's another gap here to fill. So it really has gap fills all the way up to 150, but again, it's not going to move all the way up to 150. So again, this one's just simply on watch today as well. The main play for me is still going to be Roku, and all the earnings plays are really just going to be side watches so that if Roku doesn't play out, then I might be able to find a trade on one of these other stocks. Okay. AMD, I'd probably be short bias on AMD for today. So yeah, I think so. Really, your main thing, Camilo, is to watch to see if, yeah, I mean, if BIDU, yeah, it's just like any other earnings play. If it goes up, it goes up, right? And it's not really whether or not it continues going up. It's already up, so you should have already made money on your calls, right? And then you just watch it. I mean, that's just it. Sell 75%, keep 2, right? It's what it comes down to. And if it does trend up all day long and continues to hold its highs, then it's probably something good to hold on for another couple days or at least one more day. We've already done multiple earnings plays videos, not only in the course, but we've done them on YouTube. So they're out there. Yeah, absolutely. GLD, SLV. I mean, we could take a look at them. I don't know I actually haven't looked at them today. So kind of up a little bit. Yeah, really nothing crazy there. Why is my computer being really weird? There we go. Yeah, nothing. Just pulled back. I wouldn't really be concerning myself with those moves down. Still same thing as again, still long bias for the next couple of years on these SLV, GLD. You know, I plan to be long bias for recent. Yes, thank you. I mean, yeah, I still plan to be long bias for a couple of years on these, so nothing for me has really changed on GLD or SLV. NBRV, yeah, let's see. Thank you, Super Snake. Appreciate that. There's one last one that I'll mention here is OSTK. OSTK is not a bad one either. After its big pullback, it's kind of hung out and kind of traded decently, but I would just say keep this on watch for a long trade. It might happen today. You can see we kind of bounced, kind of hung, kind of wrapped around. So I would just kind of keep this on watch for a long play over like 1940 to 1950 here. Could be a nice long play, possible. Overall, market conditions are the same as they have been for a couple years. Market's overbought. It's really the market conditions haven't even really changed for me. I still think we're in the same position we've been. Okay, that's a lie. We're not in the same position. Still the same outlook, but really just expect the Federal Reserve to continue cutting rates to try and do everything that they can to keep the economy moving, but it's not going to work. Yeah, that's just it. I mean, basically, the way you're looking at it is the likelihood that the Fed comes out and raises rates now just doesn't make sense. They're probably going to go through a cutting process, and don't be surprised if interest rates go to 0 and then to negative interest rates. That's even possible. I'd like to say that it's not possible that it would happen, but it's actually very, very possible that we go to negative interest rates. And, you could look up what that means. We don't have to go into a whole spiel here, but basically negative interest rates means that the banks will be paying you money on loans, but it is going to be pretty hard for you to get a loan. For the average person, you won't be able to get a loan through the next recession, which again kind of plays into that, that real estate game, that even I've been planning for, and that many others, want to get into too, is like, well, when we go through recessions and housing prices, and if everything gets really, really cheap, then that's when I'm going to buy houses. Well, it's like, yeah, unless you have cash to buy it outright, then you're not going to be buying a house unless your credit score is like over 720 and your credit score is impeccable and you still have cash. Because the banks are going to be very, very stingy on trying to loan out money because they're not even going to be making money on the loan. So they really want to they can, but they really want to make sure you can pay them off. And so in a really, really bad time, the banks become more stingy. They really close their doors to the average person trying to get a loan because your credit score is really not going to be that great. And the fact that you probably don't have that much cash, then they're really stingy on trying to give out loans. So again, who do you think gets all the loans, or who do you think gets the most help when things get really bad? the wealthy or people who have money or people who have been really prepared for this time or what's coming, they're the ones that get all the good deals because they're prepared and ready for it. So again, the same old story where the average Joe ends up getting left behind. KSS also had earnings. Hold on. Yeah, I think Kohl's also reported earnings. This might be something you want to watch. Again, I'm not going to try and throw too much stuff at you guys, but we'll see. Again, I'm not crazy about most of the earnings today. I think BIDU is really the only earnings that I kind of have a thing for this morning. Everything else is kind of like meh, maybe. But Kohl's doesn't look terrible just in terms of volume. It's kind of there. NBRV, yeah, I mean, we can touch on NBRV for a second. I'm not a big fan of it. I don't think it's going to trade all that great. And it's got a gap to fill to the downside. So just know that it has this gap to fill, which basically means that the stock's going to come down and fill that gap. Will it happen today? Will it happen tomorrow? Don't know. Can it happen next week? Yes. Next month? Yes. 2 years from now? Yes. But more likely than not, a penny stock like this is not going to succeed. So the likelihood that it fills this gap in a shorter time frame rather than a longer time frame is much greater. So I would actually anticipate this just breaking down and filling that gap today. I wouldn't be surprised. I would just say, and the reason I say that is because more often than not, penny stocks are garbage, and more often than not, they're not going to trade very well. So I would just be more on the side of this failing than actually doing well, which means I'd say it fills that gap down to 223 today. HD earning report. The 4 hour, the chart formation is not in a formation that I myself would be trading. So I probably won't trade Home Depot. I don't really like the way this looks. Just kind of gross looking. I mean, so far it's trending really nicely. I mean, I'd probably play the long side before playing the short side. You're not really running into any true resistance tops until you get, up to 218. We briefly broke over the last one here at 211, 212. So we're about $1 over the most previous resistance. So one way to go about this is, if you want to be long bias is, see if it does pull back. If it continues to hold over the previous high marks, like here, then you could probably watch it for a long play. Again, I'm just not crazy with the formation, but if anything, I'd probably remain long bias on it for now, unless it starts to break down and start closing below. I'll call it like 212.20s, 212.26, 212.30 area. Yes, I would hold my stocks that I bought long-term through a recession, and the reason being is because, and that's the problem, is you shouldn't be selling your stocks that you own through recessions, even if you bought the absolute high. Well, I guess it always depends on age, but if you're young and you bought stocks, even if you're relatively older, you should continue to keep and hold your stocks throughout recessions. You can deleverage in terms of, move money so you have less exposure in equities. People rebalance portfolios all the time, but you should never just completely close out of the market for most people. And the reason I say that is because I can't remember the actual numbers, but I'll probably be able to get it pretty close. But, if you go back and you just look at all the big crashes or recessions that you've had in the market, right, and they all come down, and then more often than not, they always recover fairly quickly. And upon their recovery, back to all-time highs or whatever it may be, or from the low point back to wherever the crash started from. Like take 2008, for example, right? Drop from whatever price down to whatever price, and then it really started to pick up in end of 2008, 2009, 2010. And long story short, if you were to try and time the market There's like 5 or 10 days out of the year, out of the expansion period, where the market makes its biggest gain. So what I'm getting at is, if you stay in, then you're always going to be a part of the days where the market has its biggest win or biggest gain. If you're out of the market, the likelihood that you miss those days becomes much higher than the likelihood that you get a less of a return becomes much higher. So it's even back on historical data, it's been proven that the people who hold through negative times end up coming out with a better return long term than those that try and sell the top and catch the bottom, because they end up missing the biggest days in the market through trying to time it. They end up missing out on those really nice days by trying to time rather than just being in. So again, I'd much rather just be in and then just add as we get lower, right? I just keep adding to your positions and adding more long-term as things get lower. And then when they get higher, that's great, right? And then just keep riding it until you're ready to be out. No, I am not in college. How do penny stocks go during a recession? Pretty much. Well, let me rephrase that. Penny stocks are still going to be able to be traded, but it's usually going to be very similar to like summer trading for penny stocks, where in the summer, I mean, you guys remember how it's been these past like 2 months? There's just been nothing, and even more like the past 3 months, it really just hasn't been anything significantly good. I mean, we had PSTV the other day, but throughout the summer, penny stocks are basically shit to trade, and I always say it, and then nobody believes me. They just don't want to. They're like, no, they're going to be fine. And then next thing you know, there's 0 penny stocks to trade, and then everyone thinks Connor just hates penny stocks and doesn't like to trade penny stocks. It's not the case. I'm not discriminative against penny stocks. They're just never really good to trade throughout the wintertime or summertime. And anyways, so in the recession, you could expect that they're going to slow down too. Yeah, they've been decent in the past week, but not good, right? So again, I always mention people, if you can't widen your spectrum of knowledge, but even trading ability, then you're going to be stuck, trying to trade penny stocks that aren't worth trading penny stocks. And that's what I mean. You'll end up forcing trades on penny stocks you shouldn't be trading. And that's, again, right, you hardly see penny stocks in the watch list for me, right? So when they are on the watch list, that means they're probably good to be watching, right? Like, that's the thing, is I'm super selective. So if a penny stock's not on my watch list, I will say this: either I just missed it by random chance, like by the time I made the video and put in the title, that the penny stock could have popped up later. And it doesn't mean that we don't watch it in our private group and keep an eye on it. It just means sometimes I don't get it on YouTube. But if you ever notice there's a penny stock on YouTube on the watch list, then it's probably something you want to keep an eye on. I'm not saying it's going to trade really well, but it basically means that it's met my criteria of what I see that could make it a good penny stock, right? Being short biased penny stocks is a better approach than being long biased, because the short trade is, in terms, for me, it's easier to predict a short trade on a penny stock because you already know they're going to come down 90% of the time. It's just that the game isn't in your favor to short them. If you want to put on your tinfoil hat and conspiracy with me for a second, which is not actually a conspiracy, basically anything that I could somewhat consider a conspiracy, to me it's not a conspiracy because it just makes perfect sense. So yeah, Connor's going to say conspiracy about the market, but it's not. Again, the system is built for you to essentially, I don't want to say lose, but it's really just not in your favor. And you'll hear from many people that trading is not in your favor, right? So we know that. Right? So we know that 90% of penny stocks fail, right? Okay. So let's try and short them. Figures, right? That you can never find a penny stock that's shortable. Okay. So now you need to get a broker that has what's called a good hard to borrow short list. Like, okay, cool. So we now go to this company because they have shares available to short. Perfect. Oh, well, now when we get there, we now have to pay an additional fee for the shares to short because they're hard to borrow. Sure. So now we have to pay an additional fee for these shares to short. So it's like, you find a good strategy, shorting penny stocks, 90% of them fail. We now need a specialized broker, or we need to be involved in a special program to short them. And then we have to pay additional fees to short them. And then they know for a fact that the more that the penny stock goes up, the more people are going to be interested in shorting them. So now we're going to charge them more money for the short. And once you buy the shares to short and you get short, if you close out that position, whether it's for a gain or for a loss, and want to reshort, you then have to pay more money for the short. So you have to pay every single time you want the short. And then they might, in fact, just run out. So again, so basically put it this way, when enough people jumped on the train of shorting these penny stocks and being able to short them, then all the brokers decided to charge additional fees for the hard to borrows. That's basically what happened. So yeah, I mean, so what I'm getting at is the system is really not like helping you in that manner. So anyways, right, then some things to consider. Yeah. Yeah. Like here's an example, right? You call it conspiracy if you want, but it's really probably not. Like let's look at BPTH, right? So yeah, arguable, good example. No, I'll just go too far, but it would be too much to explain. But what I'm just going to get at is, long story short, I mean, you can see this, right? Remember BBTH was like $73, right? You couldn't short it, but if you had a specialized broker, then you were going to be able to short it. And long story short, it would have costed you a lot of money. But look what happened. Like after it bounced here and then kind of dropped out, look how slow the fade was, right? It's like it's a no-brainer. It's like, oh, I would have loved to short at 73 and hold till 12. Yeah, well, if you shorted at 73 and held till 12, you probably would have ended up with the loss, because you'll then have to pay overnight fees for holding those shares to short. So again, it's kind of like property tax. It's a big scam. It's like the same thing as Social Security. It's a big scam that somehow people believe. And I would really, let me know if you guys are interested in me doing a video on the biggest Ponzi scheme in America, which is Social Security, and how I can teach everybody rather than paying in Social Security. If everyone just got behind the wagon here and agreed to stop Social Security, then you could create, then everybody who pays into Social Security, the average person, could become a multimillionaire by the time their retirement. And at the same time, you would be able to collect Social Security. Wouldn't you? Well, let me ask this. Wouldn't you rather have like maybe $6, $7, $10 million to yourself by age 65, rather than being age 65 and start being able to claim around $3,000 a month for Social Security? Doesn't that sound better to you? Right? It sounds much better to have, 5 to 8, 10, maybe even 15, 25 million, depending on how much you have to pay in, versus being 65 and then being able to claim $3,000 a month. Which one sounds better to you? Again, the system, they don't want you to be educated and they don't want you to be wealthy. Again, the whole system is built against you. But anyways, so there's a thing about Social Security. But what was I saying before Social Security? Can anybody help me? What was I saying before Social Security? BBTH? Oh yeah, it's like property tax. So you're telling me that I own the house and this is my property, but I have to continue paying you money for the property that I own? What? It doesn't even make sense. I don't understand. So it's kind of like penny stocks. Like you said to me that it was going to cost me X amount of dollars to purchase these shares to short. So now I own these shares. I've borrowed these and I personally, in theory, own these now for these shares to short. But then you're going to continuously charge me money for the shares that I own overnight because I already own them and already paid for them up front. Like, what? That doesn't, God damn it, doesn't make sense. So So yeah, I'll do a video on the Social Security thing, and and I don't want to go like too political with it, but it's basically, I'm trying to keep the politics out of it and then mix in the finance, but it basically goes down to show you just how broken that system is, and if people would just open their eyes and realize that their government is scamming them out of money, and if you just followed this simple process that they don't teach you in school, that the government could, because let me just give you a spiel. The government takes in $1.5 trillion a year roughly in Social Security, which if you do the math, if you started working at 18 and paid in taxes at 18, and there's more that goes into it, but from a fundamental standpoint and basic standpoint, the average American is going to spend about $3,000 was it a year? I had to double check, but I think they even said like a year. I think it was about $3,000 to $4,000, the average person, right? So some people may be paying less, some people may be paying higher. So again, your situation's always going to vary, but if we just go with the simple terms, right? The average person pays about $3,000 in Social Security tax a year, which then comes out to about $350 a month. And if you're 18 and took that $350 a month and you invested it over the course of however many years, all the way up into 16 with an average rate of return, I think it at about 10%, you'd end up with like $8 million by 65, which is far better than being able to claim $3,000, like every single month at 65, right? And so let me ask you, why on earth would I pay from 18 to 65 to only be able to claim when you turn like 65 and the average life expectancy is like 75? It's a scam. They have you paying your whole life, right? The average life expectancy is now maybe 84 if you're lucky, right? Based on how crazy I was, I'll probably die at like 75. So you're telling me I get to pay for my whole life to claim for 10 years? Who was the brilliant man to come up with this idea and then make enough people stupid enough to believe that that's a good idea? It's just so stupid. It's a horrible idea. I would never want to do that. Terrible. So again, there's no reason we should pay our whole life into this system to only be able to accept for like 10, 15 years, right? I mean, I get it. I know the reasons behind it, but let me show you a better route, right? Let me show you how to become a multimillionaire with that money that they're stealing from you. So again, they know it, right? The government knows the life expectancy isn't very long, so why don't we just have all these people pay in, right? It's a Ponzi scheme, right? It's a Ponzi scheme. Your government's running a Ponzi scheme, and YouTube might shut me down here very soon for speaking the truth, but it's a Ponzi scheme, and don't think that it isn't anything else. What is a Ponzi scheme, ladies and gentlemen? A Ponzi scheme is this ideology or idea built off of one thing. If people continue to pay in, then the people at the top can get the money out. So I become 65, you guys pay in the money, and then I get to take your money. And if the people on the bottom stop paying in, then the system fails. It's unsustainable without the lower end supporting the top. It won't work and it will crumble. If they can prove to me that the Social Security system can last without people having to pay in from the bottom to pay out the people on the top, then yeah, I would consider doing it. But if you can't prove it, it's a Ponzi scheme. And they can't. They know they're running a Ponzi scheme. So anyways, enough of that, ladies and gentlemen. Everybody have a great day. I'm going to get back to where I need to be, which is the private group and our trading session. If you guys feel like you want to join in and spend some extra time with me and a couple other lads in our trading room, feel free. Links in the description of the video, and I will see you guys tomorrow morning for another video.